Hello, this one is a trade that you can use your play money with. We're not going to take a lot of risk on this. We're just going to see if we can exploit the situation. If we lose, I'm expecting to, and if we don't, well, we'll probably make a lot of money. Alright, so first we're taking a look at CenturyLink Telephone. I already put my drawing here. When I was working over at Raymond James, and actually, yeah, when I was working over at Raymond James and Associates, I was given a task to find some stocks that would be good for just long-term income strategies. So, of course, telecoms. I thought of those. I thought of Verizon, VZ. I thought of AT&T. Both have a 6% plus dividend. And also, I was thinking about CenturyLink Telephone, which Raymond James recommended as a buy. But I'm really not trusting Raymond James, as I took one of their trades for JD Uniphase. They recommended to buy it at $22.50. Needless to say, it's at $14.75 now. Yeah, I have a little sore money still in that stock. Anyway, CTL. What I was really looking at today, well, actually, first let's just go over the quick technicals. We can see here what looks to be like either a symmetrical triangle, or if we zoom out, like symmetrical triangle would be in this area. If we zoom out, we could maybe even consider it a descending triangle, albeit a sloppy one. But regardless, we had a breakout right here on high volume, and our two measuring objectives would be for the symmetrical triangle from here to here. First target would be 35, second target would be 34, and if you wanted to stretch this into an ascending triangle, our final target would be once again about 34. So we have several targets that are bunched up around in this 34-35 area. Now, how can we be sure that the breakout was true? We have earnings coming up, which always throws a wrench into everything. And this is something I learned from a book by David Kaplan called Volatility: The Option Secret. I'll even post a picture of it on the post here. When there is a breakout, whether that be downward or upward, if implied volatility of the options increases, there is a much better chance that the breakout is true. So, we had the breakout right here, around July 13th to the 15th. July 13th to the 15th, option volatility increased. And see if I can get a square. There we go. Right there, that's what we're looking at. Option volatility increased right there, giving more power to the breakout. And I already showed you there was increased volume on the breakout too. So, symmetrical triangle, CenturyLink is going down. But needless to say, in the recent days, especially today, and this opportunity might be gone by the end of today. Once again, I'll get rid of the volume pane. Look at this. We go out to the 2-year chart. Options are cheaper than they have been in the last 2 years. Even we go even further out. The last time that options were this cheap, not within the 5-year, let's check the 10-year. There we go. The last time that option was this cheap was February 1st. Oh wait, take that back. Oh, it's because I'm on a monthly chart. There we go. Last time options were this cheap was on one single day of December 1st, 2006. We have a special situation here. We have a downward breakout. Options are dirt cheap. So what can we do? One, I was looking at the puts on the option chain, and I tried to find one that was very cheap. And of course, I'm looking at the I'm looking at this implied volatility side here. You go through here. Yeah, it even looks like the opportunities are vanishing as we speak, because the bid and the ask was 125, 130 when I was getting into this. We'll look at the August ones. There we go, that's the one. August, the 39 put is trading at 12.22 implied volatility, the lowest volatility out of every single option that's being traded. And I mean that is being traded. There's a lot of bid and ask offers, but there's no shares or option contracts changing hands. This is really cheap. If you can get in at 130, 135 and then hold it and then perhaps initiate a free trade when the price keeps moving down to make this a riskless trade, you can make some money off of it. So we will buy the CTL at 130 if we can. Just wait a second. Like, if you look at the trade grid, these are large trade sizes. Sometimes if you put in just one single contract, the market makers will see, okay, we'll take this one single contract at a bad price just to get out some of the little odd lots. It's no skin off our backs, $5. All we care about is the big contracts. So we can usually get a good order fill. So 130, go to our risk profile. Maximum risk is $130. Maximum gain is infinite. Our target is around 35, 34, so we'd expect anywhere between $300 and $250 of gain. We're going to keep our stop loss for this at 50%, or if the stock breaks above $40. And our probability of success is still only 50%. We got a 50-50 chance, but we have a 50% chance of making a lot of money and a 50% chance of losing a little bit of money. And remember, if we do initiate that free trade, this is going to significantly improve our odds of success. Alright, just wanted to show that one to you. This opportunity is probably going to be gone by the end of today or maybe tomorrow, so try to get in the trade quickly.